So I have some bad news to report. The Dow Jones is starting to
the Dow
drop
Jones
again.
is
starting to
the Dow
drop
Jones
again. Let's see. Here we go. Let's try that. All right. All right, so let's get the word out. All right. All right, so let's live stream it. Did they circuit break it? No. All right, it's traveling right on the lower bounds. Make sure my stream is okay. So they're going to circuit break it if it goes to -8%, I believe. So what I want to know is if they already circuit broke it or not. I don't know what the rules are. I was pretty sure that they would only circuit break it once in a day. What's this? Is this old or is this new? That's old. Look at that. Royal Caribbean got devastated. I saw it -25%. Look at that. -25%. They just don't care about Royal Caribbean. Let's look at that. Yeah, so I found out why we aren't hearing any news out of Italy. It's really, really shocking. I did not know that they were so backwards, or so. But look, so we already know that Facebook is censoring everything that has to do with the coronavirus. I mean, they put my stuff in lockdown all the time. So I've been saying Morona virus, and that doesn't really trigger. But look at this. So only 2/3, less than 2/3 of people in Italy have been using Facebook in February 2020. That's down from 75% in August of 2019. So they've seen a marked decrease. Now down here, only 2.5% use YouTube. So if only 2.5% of the people use YouTube, that makes me think that less than 0.2% probably post, and so that's probably why we're not seeing anything out of Italy. Now, if I were to do this on purpose, if I were to infect a country on purpose, I would probably choose Italy because they're only 10% of them are on. Look at that, 0.2% are on Reddit. 0.2% of Italians are on Reddit. So let's figure out how many Italians there are. Italian population. So we got 60. Well, let's look at this. This is a little more historic. But so we got 60 million times 0.2%. My math was wrong. That's 0.02%. So you're trying to tell me that there are only 120,000 Italians on Reddit? Wow, I had no idea. Okay, wait. Here we go. Here's the collapse. The collapse situation is unfolding. We're way outside the Bollinger Bands. So what's going to try to do is it's already shot past this. It's going to go right here to 267. We are probably going to see that right now in about 30 seconds. Once it goes to 237, then like I said earlier today, that's the next drop. That's probably it's going to shoot past that. So we're going to look at 257. 257. And then after that, we're in deep shit. We're in deep shit if it falls below 257 right now. Let's go see how the Dow Jones is doing, because the Dow Jones is more propaganda. They care much more about this 23,000 number, and anything below 24,000 is quite psychologically important to the American people. And so it has gone below the 23,892 gap of this morning. So we have effectively closed the gap. They tried to close it. It didn't even go halfway. It looks like it went 2/3 of the way. So the gap is broken. And like I said, I don't think this gap, I don't believe that this gap will be filled ever. I just don't. I feel in my gut we're not going to see 26,000 in 5, 10, 20 years. I don't even think I'll be alive for it. This gap, where was it? This guy, the end of the old order on 212. I have to go a little further out. This guy right here, Dow 29. Well, this looks like the tippy top. Dow 29,549 on 212. Yeah, that is 212. That this was the defining moment that our old order existed. Here's the historic moment. Dow negative 2,000. My prognostication since early February has been proven right. So many of my friends told me, "Oh, Theo, this can never happen. You will not see Dow 2000." Well, I hate to break it to you, I was unfortunately right. Forecast confirmed. Dow negative 2,000. Buckle up. Don't sell into a panic, and definitely don't buy anything today. And we'll paste this. There we go. Man, so now we just wait. The real panic's gonna start. So let's go to StockTwits and see what people are saying. I'm gonna try to keep this guy up. Well, crap. Let me reverse that. This is historic. And I'm going to edit the Wikipedia page as soon as the market's closed so I can get the second edit for the worst day in stock market history. Yeah, see, this is what they're saying, the same thing as me. This is going to test 16,000. He's going back all the way to 2006. So yeah, this is the Great Recession. We're going below the Great Recession. You should buckle up. Your 401ks are probably not going to survive. I can't tell you when they're going to fall, but I mean, it's obvious. The 401ks, any account that is not in your name, especially money markets, they're buckling right now. Okay, we have to hold the S&P 500 at 27.2, but I think it's already fallen past that. No, it's holding on. Let's shift to the SPY. So let me give you a little advanced tutorial. People have this idea that they can't be good stock pickers. Because of this, they cheat. They do the sloppy, it's not really cheating, but they do the sloppy thing. They have this company that buys one share in it buys some shares of every company in the S&P 500. So the odds are that that it will behave like the S&P 500. But what happens is that this has created a multiplier effect on the market as a whole. And so these people are holding basically future purchases. And so what will happen is if this collapses a whole bunch, like if you see negative 20 to 30% in a month, then this can actually go out of business and leave everybody, it can go insolvent and leave everyone holding it with absolutely nothing. ETFs have only existed since about 2005, I want to say. They were brand new during the economic recession. Let me just verify that. Well, it says 95. Okay, ETFs traditionally have been index funds, but in 2008, the Security Exchange. Okay, so yeah, so these things have only been around since right after the Great Recession got really bad. And so what would happen is that you look at this market cap, and that will show you how much money is in it. So $264 billion. That's how much they have in there. So what I'm saying is that if the S&P 500 is substantially lower than where it was in a month, then you're going to have what's called a run on the options markets. Runs on option markets are extremely rare. The option market's only been around. It only got deregulated in 1998, and its deregulation was the main cause for the stock market boom of the dot-com era. And so it's been implicated in every single major depression since then, the dot-com bust, the Great Recession, and it's going to be happening in this one too. So what we want to do is we want to see the exposure on March 31st, because this is when the S&P 500 options become due. So the strike price is how much. I wanted it to go lower. This is how much open interest. That's what we're interested in. It's how much open interest. Where is it? So open interest 0, 0. Not worried about that. We want like 10,000. Am I in the wrong column? Open interest means that there are people actually holding the contract. So we got 429 there. So what it means is that if it's above this price at close, it's going to be in the money. So people would have been considered idiots last month if they thought that it would possibly close lower than 261. And so they're starting to panic now. But let's go here. So we'd have to add these columns. See, here we get the big one. All of these people are going to lose everything because there's no way it's going to be 285 in just 30 something days. So they're all going to lose their shit. Now these are multiplied by 100. So let's just do some simple little math. to find out how much money is going to be lost. So if we go to this is how much they're at near the money. So about $25 each. So we're going to assume very rationally that these people paid $25 or more per contract, and they're in increments of 100. So we're going to go to where they were in late February, right here. So let's just briefly do this. We got 357, 300. Alright, so these are only the positions that have been bought. Oh, it still keeps going. And like I said, we're going to assume the average purchase price was $20, because that's a fair assumption. And that's 20 times 100, or $2,000. Oh boy, it keeps going. I'm going to keep going. There are a lot. So people place these orders years in advance, up to 2 years in advance, and then you're just stuck holding them, right? And so all these people are the ones who cannot get out. It was much higher several weeks ago. We've had lots and lots of selling. These are the people that maybe they're shorting it. Maybe there are lots of reasons why you would actually make profit holding these. But okay, so that's enough. And there's a typo right here. I'm at 180. Okay. So we're looking at 30,000 contracts times 100 times 20. So that's $60 million. $60 million will expire worthless on March 31st. And that's just one day. As you can see, there are more. Now, typically the 20th is the option expiration month day, or I think it is. It's the third Friday, so it would be first Friday, third Friday. Third Friday is the typical month. So I would expect that there would be a lot more open interest on this day. So let's just scroll down. Look at that. Look at that. 25,000 people got out. Only one person remains. It's like a ghost town. Yeah, I'm reading that right. Alright, so these people have lost 70% of their money. They all got out today. That's what that means. They all got out today. So, let's see. There's some huge money that got out today. We got 25.92, 28.286. Let's see. These guys got out. No one really suffered. Look at that. 77,000 got out today. Oh, and I even missed these. So, these are people that were betting long and they got fucked. They're just fucked. So they're all getting out. And as you can see, there's only 352 remaining, only one remaining. 77,000 got out. I like this. You can see much more than with the stock market. So we're gonna go here. Wow, times 100, times 20, 1, 2, 3, 1, 2, 3, $350 million. Add that to the 60 million, and you got $400 million in just 2 days. So what I can show you is that I can categorically state that no matter what, unless the stock market's super rally via hyperinflation, you're going to lose several billions and billions of dollars on this S&P SPY thing. And the same's true for all the indexes. So it's going back up something, so that's pretty interesting. Let's do our technical analysis and see what is happening over here. Can't really see. So they fell below, and now, you know, people are freaking out. They're thinking irrationally. They're thinking, oh, it can't go below 2008. The Federal Reserve won't allow it to. And so there are going to be a lot of suckers that buy up. So you just look at this line and you try to find the line over on the left that it intersects to figure out where we're going next. So let's go to 1 day intervals. Zoom back in. And so there's our line right now. Our line is all the way to right here. So earlier this morning, we were right here at 2018. Where was it? December. Oh wait, we were right here earlier this morning. Yeah, we're right here at December 2019. Well, now we have to regress all the way back to June 6, 2019. Now I want to know what happened on June 6, 2019. So I'm going to say S&P 500, June 6, 2019. I'm guessing it's when they bombed Syria. That's the only thing that really comes to my mind. Did I get the date right? Okay, June 3rd. I think I got the... Oops. I got the date wrong. Let's see. Fortunately, they do write-ups on most days of the stock market, so you can really get a good historical record of what's happening. Okay, so this was the China tariff thing. So, oh man, what a joke. So this was the small downturn caused by people fearing the Trump tariffs. I bet if I do that, Trump-China tariffs, June 2019. Right there. Trump says tariffs could be raised another $300. So this was the article that caused that market rout on June 6th. So that's a pretty big deal. So we're approaching what they thought would be a terrible idea. Need to go to 1 week. So that's the number where we're headed. Where it's the only stop. There's no other stop. 22,445, and then after that, I mean, if you're lucky, it'll give you a day reprieve at 17,000. But the only other stop is this guy at 16,400, or even that guy 15,973. And then, like I said in my first video, it gets super scary. You're gonna have to test the Great Recession lows of 6,600, sorry. And then after that, the bottom falls out. Like, the bottom literally falls out. And you have to get older than the S&P 500. You have to go to the Dow Jones. Do 1 month. And then the next stop after this, after the Great Recession, is unfortunately the Great Collapse of 1987 right there. And then if you go below 1833, you're looking at a full collapse of the world economic order. I think the world economic order will actually collapse right around here. But just in case it manages to survive in, May, I totally see the economic order collapsing around July to August. Yeah. people like I totally believe that coronavirus will kill a minimum of 5% of Americans, like minimum. But people don't understand this economic crisis is going to take so many lives. And people aren't even thinking about the blood shortages that are coming. Talk about 3D chess, it gets real depressing real fast. Okay, well, let's focus on what we can worry about today. Let's go back to the 1 minute. Let's go to 1 minute intervals. So that's good. They are trying their best to keep this afloat. Because, man, it is scary. When they see it go outside the Bollinger Band like that, like at 2 p.m., when they see it below 23,000, they must be freaking out. They must be having conference calls. Treasury secretaries having a terrible night. Federal Reserve guys thinking, oh, man, is it time to kill a bunch of people? Because the Fed's totally corrupt. Man, but the S&P 500 is so far outside of its band. That's bad. Let's go shorter. Let's go 5 minutes. So they're trying really hard to keep that in. Like I said, they freak out when it does this thing, like it did right at the open, and when it did like 5 minutes ago. They freak out. Let's see how the general economy is doing. I want to figure out how McDonald's is doing in Walmart. Walmart should do relatively okay until we start seeing Chinese disruptions later this month in their supply chain. That's going to be another oh shit moment for the American public. Look at that, plus 6%. I see plus 0.6%. I see that. Walmart should do pretty good. McDonald's is going to get gutted. No one's going to want to eat when they can't trust the food. Look at that. The investors believe with me. No one's going to trust fast food because no one will trust the food. Let's go to Burger King. I bet it's down. Oh, privately owned. Good for them. What about Whataburger? Private Jack in the Box? Negative 13%. See, they should have called the circuit breaker on that. The elites just don't give a shit about the private companies. I'm seeing them absolutely gutted. Let's see, let's see how Royal Caribbean. Last time I looked, they're negative 25%. Ooh, still negative 25. Yeah, people holding this are fucked. Let's look at the options. This Royal Caribbean's a company I don't expect to survive, but I haven't even looked at another stock. I haven't. I'm gonna look at that real fast. I have not looked at another cruise ship stock. I don't think most of them are open. I think Princess isn't even on American markets. Princess Cruise. Yeah. Let's try Carnival. Carnival Cruise Line. Negative 20%. Damn. Alright, let's see. If we want to see fiscal insolvency, first we're going to go to the end of the month. Now let's go to the main option one. All right. I need to figure out where they were at $80, I believe, just a month ago. I need to find that out to gauge where people put their money. No, they're at 130 2 months ago. So yeah, this company very well may not survive. Whenever options are away in the money, the people are way out of the money. When put options are way in the money, meaning the stock is really low, then people have to sell their stock just to cover the put options. And so here we go. Fortunately, it's not a lot of money. Man, look at that. No one is willing to trade. They traded many days ago. That means all these people already got out. I didn't catch it in time. So yeah, it's good. Let's look a year out, see how far they are. These people would have a much harder time moving. There's someone optimistic. We got one optimistic person and the whole lot of them. And here we got some pessimistic people. The average, like most of these bets for that it will be. Oh, those are in the money. I want to find out of them. It's crazy. It's so far low they haven't even created the contracts for lower. So yeah. I don't see these cruise lines surviving. Well, it looks like the Federal Reserve's plunge protection team. Let's go watch a video on that. It's not even supposedly real, but it exists. I've seen it in action. Let's try this guy.
Hey, good afternoon, everybody. An educated economist here. So, thought I'd bring you a shot next to the river, you know, not from the car this time. So, I had a few people ask me to do a video about the plunge protection team, kind of explaining it in layman's terms. And if you're not familiar, so I thought I'd do that for you today. So, and I also wanted to thank you, Miss Darnita, for asking me to do this video. So, this is a little shout out for you. Appreciate it. And so, I guess it kind of helps to understand the plunge protection team. We should probably start back in the 80s where they came about, right? And so basically what happened was during the Reagan administration, there was a huge stock market sell-off. And it was like to the tune of like 20% in the course of like an hour. And it just freaked everybody out. And they came up with this idea. It was just like, okay, so we need a team of people who can interject money into the market in case something like this happens again, because you know this 20% in an hour it wiped out so many people. It just devastated them, right? And so what they did is the Treasury, the Federal Reserve, the Security and Exchange Commissions, and the Commodity Future Trading Commission each had a member to be in the group, right, into the plunge protection group. And so what these guys do, I guess it helps to know what these guys do is to kind of understand how the exchanges work, right? So in an exchange, you have the traders, right? These are the guys, the traders and brokers. These are the guys who buy and sell. And then you have what are called market makers, right? And what market makers do is they kind of help facilitate the trades between the brokers to make sure that it runs more fluidly. So they're the ones who are adding liquidity to one side of the market or the other in order to make sure that things happen within the markets, you know, that they don't get hung up like a trader waiting for a sell order to take place. Market makers make the orders happen, right? So these guys are just adding liquidity to one side or the other. They're not really like market movers, right? As far as like changing the prices, they're just really there to kind of facilitate the trades, to make sure that they happen fluidly. And occasionally these guys run out of liquidity or run low on liquidity, and they kind of come in some issues where they need funding and money to make sure that the markets move properly. And so what ends up happening is that they have another group that's called the supplement liquidity providers, right? And what these guys do is they make sure that the market makers have plenty of liquidity for the traders to do their trades without any hiccups. And so what ends up happening is
The markets are panicked right now.
that
You can tell because Yahoo Finance is dying with their 5222 overwhelmed server messages. So we need to be very frosty.
a lot of traders will put in what's called stop loss orders, right? And so if the market achieves a certain level of downward motion, then they sell everything they got so they don't have any more losses, right? And that's called a stop loss order. So, the price of the stock comes down, they're like, oops, I'm panicking, I don't want to lose any more money, dump everything I got. And that's the stop loss order. Well, everything is done in computer algorithms now, right? So there's not actually traders out there. Well, there probably is some, but there's not like a whole lot of traders. Everything is done in computers. So they put computer entries in, and then these computer entries is what's running the stock market. And what ends up happening is that these computer algorithms end up triggering some of these stop losses, right? They're like, as the market's moving, and they end up throwing a buy order down in there that's down near these stop loss orders, and it triggers the stop loss order because they think that this is where the market's moving to. And so all of a sudden stop loss orders start kicking in, and those trigger more stop loss orders, which trigger in more stop loss orders, and then pretty soon you have what's referred to as a flash crash. Right? And that's where the plunge protection team is supposed to step in there and inject money and start buying stocks to stem the tide, right? To keep it from falling any further due to these algorithms that are triggering the stop loss orders. Okay, so you got the traders, you got the market makers, right? They're the ones who are helping the traders. You got the supplement liquidity providers. And they're adding liquidity into the market makers to make sure everything's going good. Now, when they have an issue and all of a sudden they have this run and the stocks are dropping like crazy, that's when the plunge protection team comes in there and stops it. Okay, makes sense now. That when you have like these flash crashes where these algorithms are kicking in these orders and all of a sudden you're losing the Dow is sinking. That's where the plunge protection team is coming in and saying, hey, we need to stop this from happening. So the plunge protection team can't themselves just jump into the market and buy stocks, so they have to run it through banks. So that's where the Goldman Sachs and the JP Morgans, that's where the plunge protection team kind of teams up with these guys, right? So yesterday when we had Mnuchin come out there and he said, hey, banks are cool, everybody's got plenty of liquidity, we're going to be loaning money just fine. That was them reassuring that the plunge protection team is in place and ready to play the game, right? So that's basically the plunge protection team in the simplest of forms. It's like money, liquidity added to the big banks to buy stocks during economic runs. Okay? I hope that helps. Thank you very much, Uneducated Economist. Talk to you guys later.
Oh no, I've been talking this entire time. My microphone was on mute. Oh no. I need a better microphone really bad. If anyone wants to donate one. If anyone wants to donate a microphone so we don't hear all this stuff, I'm going to add one to my Amazon wish list. This guy. I already looked it up. I wanna Logitech USB. This guy. It's only $20. Boy, I wonder if that'd be better. It has a lot of. I'm gonna say this guy. Microphone's actually shielded. What's the difference? Oh man, no, thank you. Alright. Oh, it looks like it's accelerating. -8%. -8%. So let's figure out where that is on the worst percentage days. My goodness, we started the day at like number 18, and now we're at number 8 percentage wise. This is historical days indeed. Yeah, like I said, they're gonna do whatever they can to keep it above this thing, because once it gets to 23, 719, 720, the floor is gonna fall out. I mean, that's when you want to have a full car of gas and a couple thousand. I mean, a full gas in your car and a couple thousand in hand. My goodness. Oh man, that's really sad. I want to figure out what happened on these days. Like, what's the day in question? -8. This was Black Friday. Let's go ahead. I think that's Black Friday. I always get confused. I'm pretty sure it was Black Monday. Yeah, I get them confused. Okay, so if that was Black Monday and Black Friday, this would be, I guess, the second Black Monday? Crap. That sucks. And, so history rhymes, because 1987 is literally the one we're racing towards. And so what it means is that all the economic progress in basically the entire world will be unwound 30-something years to 1987, possibly as soon as today, though I'm not counting on it today. I would say there's a 10% chance it could go to, no, 1% chance it could go to 1987 today. But by August 20th, you know, I'm putting those odds to several $100,000 if in bets, if I believe that the market wasn't going to completely crash. I think that if you're in a high profit, let's look at this. So I bet Royal Caribbean would fall when it was at $130 on February 5th. Let me make sure I'm correct. It was when the Anthem of the Seas docked in Bayonne, New Jersey, February 2020. It was way before then. Let's say coronavirus. I'm afraid I'm missing historical. No, nothing's happening. Okay, February 10th. February 10th was when I placed my shorts on the Royal Caribbean. So, I'm sorry to say it, this educational thing will be of limited import, because I believe the way to make profit via this method will end like any month now, any week now. But this is how I've made tons of profit in the past. So, I went here. I need to get to their main stock ticker. What a terrible interface. Maybe it's this guy. So we're going to go year to date. Find February 10th. So I found out about the coronavirus right around here on January 10th. Back then, it was called, there's this scare where they said bubonic pneumonia. pneumonia in Wuhan, China. This was the very first time that I thought something was up. I bet I can find it. Well, I'm going to remove Wuhan right now. I for sure heard it in China. And so Google's censored, so I'm going to go to DuckDuckGo. Here we go. See how I told you Google censored? I found it straight away at DuckDuckGo. So, well, maybe not. Crap. It's very old, 10 years old. I thought it was via Zero Hedge. Well, I'm going to cite that. But I definitely knew something was up in early January. I wasn't keeping good notes back then, so I don't have that backed up on my list. But as soon as I found out about that cruise ship, that plague ship docking in Bayonne, New Jersey on February 10th, I knew it was all over for this nation because they let all 2,500 people out, even though the guy was in critical condition, and they escorted him without wearing face masks or even gloves. And so it was $110 that day. I remember it. And so what I did was I went to the options, and we're just going to pretend that it's today. And if it's 48 now, then I think it's going to be $20 next month. And so we go down to the puts, and we want to go a couple months in advance. So let's just go to April 24th. I did it about a month in advance. In February, I did it for the end of March. So sort of like this. So then, well, it seems that they haven't caught up yet. But let's just pretend you could invest lower than here. So I was able to get $20 puts at about 1,000 to 1 odds. Or I picked literally, what did I pick? I picked $80. I picked $80 strikes for roughly 1,000 to 1 odds, meaning 1,000. They're willing to pay me 1,000 times the premium would be to make the bets. And so what I ended up with was the March 20th $80 ones. So we can go and look. I sold out way early because I was afraid of the stock market absolutely collapsing. I was afraid of the banks going insolvent. Look at that, 2,100. My God, I'm gonna have to keep this out so we don't miss anything. Holy shit. Yeah, this is fucked. So anyway, I was like sure in my gut it was going to lose more than 20% in a month. I see the cruise industry is completely collapsing in the next month. I don't think cruises will even be legal in June. I seriously don't. I believe worldwide they're going to force the cruises to be at port and anchor. Any sane government would have done that already. So let's look. If I sold at what did I sell at? I bought at 0.4. So $1. I did 40 cents a contract. Let's see, calculator. I bought $1,500 worth at 40 cents a contract, which comes up to be about 4. I ended up with, it's 40. I did that wrong. I ended up with 39. I had 39 that I bought for $1,500 roughly. It was like $1,500 and change. And so then I sold at 0.420. So that becomes that. And so that's where I said I made about $20,000 profit on a 1500 initial. So now let's see where they are, because I did that trade on February 29th is the one that I sold. So I sold on February 28th because I was it takes about 3 days for this money to get from a brokerage account to your account. And then, it's pretty hard to withdraw more than $10,000. So it took me several days to withdraw it. So I did not want to wait. I did not want to wait till, like, say today. I wanted to get out before the first negative 2,000, which everyone told me wouldn't happen, that I'm looking at right now. And so had I stayed in, here it is right now. So that went to 1670. So we do 16 times 100 times 39. That is the profit, ladies and gentlemen. So I would have made $63,000 profit, close to $6,400 if I had stepped in today. Now that makes me feel like shit, but at the time I really, really, really wanted food, and I had no idea how long it would take for down negative 2,000. I mean, when I made this investment, I didn't think we would see these numbers until literally. I thought we were gonna see them in late March. So this is really scaring the crap out of me, and that's why I decided to sell early. I admit it's not that rational, but better have 15,000 in the bank than nothing in the bank and having the ATM's debt limited. Let's see, I lived in India almost all of 2016 and 2017, and in November 2016 we had what's called the currency. What did they call it? India. What did they call it? The Indian note bans. They banned the notes. So what happened was that I worked in India. I did a startup company where an investor paid me to start this company. And in India, they used to have 500 and 1,000 rupee notes. I mean, 500 and 1,000. And so, if you look at how little those are worth, basically, it's basically worth $2. Or $7, right? So 500 notes are not that much, and you can imagine that the 100 notes are basically about $2, which is what I was trying to say. So you have 100, 500, and 1,000 notes. So it's only worth $1.30 now. It was at 60 when I lived there, so they've devaluated about 25%. And so I had hoarded all these. All these $500 and $1,000 rupee bills because it took up much less space. And unfortunately for me, my friend called me up and said, "Hey, I'm in a meeting with these Indian prime minister, and he just announced that they're going to invalidate every $500 and $1,000 bill or 1,000 rupee bill in just an hour and a half at midnight." And so I had to rush out. And let me go to this thing. I'll show you the photo. But I had to rush out, like literally that moment. I rushed to the mall, and there are about 30 to 40,000 Indians crammed into In Orbit Mall in Hyderabad. I'll show you. It's a really pretty mall. They have so many malls in India. High Tech City. I miss it. So here's the mall, and just imagine, instead of like just a couple people, 30,000 friggin' people in this thing. It was nuts. It was lunacy. People were freaking out. Everyone had the same idea as me. We got to spend all of our 1,000 notes right now because we only have about an hour before God knows when we'll get money. And so what I ended up doing was buying a great big, like 65-inch TV, which were way more expensive there in India than America. And because I bought that, I was able to barter it for actual rupee notes about 6 weeks later. India doesn't have return policies. Most countries don't have return policies. Um, so, like you just, my initial idea was just to return it after the collapse to get some money, but no, that didn't work. So I had to actually barter it. I'm looking for the photo now of the cash. That was November. It's a really cool photo. Let's see. I hope I still have it. I wish there was a way to better organize photos. Wow, that sucks. But yeah, if you could see the picture, it was like hundreds and hundreds of hundred rupee bills for where just like 5 US $100 bills could be made. And so I lived through a currency collapse once in my life, and it was not pretty. It took 6 to 7 weeks before we could get even like maybe $50 worth of cash. I expected a huge run on the Indian banks, but the government told them everything's fine, and everyone believed them, and so there wasn't an actual run on the banks. So I guess that's good. Um, but yeah, so like I said, if you think some of these stocks are going to collapse further, and you believe the market is the same, then what you're going to have two major problems, the same two problems I had when I made a fortune in the fiscal collapse of 2008. Uh, they don't create these contracts until the next month. So I mean, you won't be able to find, like, let's go to 2020. It's so far off that you cannot get much lower than 48. Once we hit 35, then you can expect this company to go under, or at least experience extreme market fluctuations, because they won't have the derivatives able to seize them. To smooth them out over time, and so they become like Bitcoin. If you want to see what markets will look like in just a little bit, you just look at Bitcoin with its huge price swings. So let's look at that. Well, most companies won't be as stable as Bitcoin. They're going to be like Bitcoin Cash. So I would imagine Google, Facebook, those huge companies worth hundreds of billions might be worth that. But this is what you'll start seeing, like huge swings in a daily basis. That's what you'll encounter in about a month. Just huge swings, and you're gonna have a lot of dumb people, a lot of desperate people wanting to believe that it's turned around. They'll listen to Donald Trump saying that it's all, a hoax, all sorts of stuff. That's called catching the knife when you try to buy in a down market that's still falling. Catching the knife. And you just can't catch the knife. You can't buy right now. Don't sell today. Today is probably a bad day to sell because everyone's panicked. But when you see the dead cat bounce, that's when you want to sell. A dead cat bounce. So we're right here. In like a week, it's going to be right here. You want to sell right here. Right here. The problem is you don't know when that will be the case. So it's rational to sell like 5% now if you have no cash on hand. Gold and silver are totally manipulated. Don't buy gold. It's a total scam. Gold will not save you in an apocalypse. I've tried many times over the years to barter with gold and silver to see how easy or hard it will be, and I could not get anyone to accept a gold coin. I found people were much more willing to accept American Silver Eagles. So if you go to AP Mex, where I buy my Silver Eagles, yep, I agree. You want to get this guy. You want to get this guy. The reason is that it's actual fiat legal tender by the U.S. government. If I can look on the front, it's literally defined as 1 ounce of pure silver, and it's worth $1. This is the literal legal definition of a dollar from the 1787 U.S. Coinage Act that's never been amended or appealed. So if you have 0 silver dollars in your possession, you have 0 real dollars. Well, it looks like the stock market is back, so I'm going to sign off again. Stay frosty, people.